Mr. Finance here. How much money do you need to retire rich? Now, why is this even a topic? You need as much money as possible, right? I need like $1 bazillion. I need a jet. I want an elephant. A monkey. Who doesn't want? You don't want a monkey? Everybody wants a monkey. I need a monkey. Nah, seriously. We're talking about retiring rich and how much money do you need. This is how you figure everything out. Everybody talks about, 401ks, Roth IRAs, different investment vehicles. In school, it's just a fancy word for stuff you invest in. Now, you're wondering, I'm a young person, I'm an older person. How much money do I need? When do I stop? Because there's a lot of people, they're 70 years old and they're working, okay? They may be debt free or something, but they're still working, right? I need you to understand, it's not about how much money you save. Right now, if I said, here's $1 million, right? You would think it's a lot of money, but let's say you made, I don't know, $100,000 a year. It's only 10 years. Now, unless you skydive every day or you're a stunt man, you plan on living more than 10 years, okay? So even though you're like, oh man, I got $1 million a lot, it's not, because you need to live, right? What you have to really think about is, what is your monthly? And you work it from there, correct? Now you're gonna have to use a calculator. We'll call it a future calculator. And I don't want to get into it because it's just super nerdy. You got to understand this aspect. If I gave you let's say your number was $5,000 a month, right? If I gave you $5,000 a month, every year you would be able to purchase less with that $5,000. Meaning that $5,000 a month, but it feels like this month you're buying Lamborghini, whatever you're doing with that $5,000 a month now, you're not going to be able to do the same thing 30 years from now, because every year the price of everything goes up a little bit, like 2% or something. And it may not even go up 2% a year. It may just jump every couple of years, meaning something that's $1, it's not going to be $1 and then $1.02, then $1.04 and $1.06. It's going to be $1, and then in its third year it may be $1.10 or $1.05. Things just jump, but trust me, they go up on average about 2%. All right. And you could use a future calculator. I'm not getting into that. A wonderful site that has tons of calculators is bankrate.com. You could use a present value calculator to tell you like how much whatever's worth in the future. But don't worry about that. Let's just talk about this and how wealthy people live, how people can retire and just be okay. You have to look at your monthly, okay? I'm going to give you guys an example, a rich example, okay? Let's say right now you want to retire. So you're like, man, how much money do I need? Trust me, the $1 million Roth IRA thing, it's not going to do anything for you, because it's 30 years from now. It's so long. You might not even want to do anything. You might just stare at a cactus or do something boring 30 years from now. But let's say you plan on retiring in 10 years. You want to know how you want to live, because I'm setting people up to retire in 10 years. Okay, you can still work because you're super young and it's just more money. You just get stuff faster. But I'm setting you up for a 10-year knockout here. All right, so here's what you do. You look at what you like and how much everything costs. Like, let's say you want a fancy car, not super duper fancy, but pretty okay. Let's go super fancy. A Lamborghini, a baby Lamborghini, a Huracan. The lease on a Huracan is, I think, $2,200. You could get not a convertible, just a plain one, $2,200 a month. Probably got to put $20,000 down, but we're gonna cut that out of here. So let's say you got to pay insurance and gas. Trust me, gas on exotics are crazy, because you just drive from gas station to gas station. That's it. You see somebody in a Lamborghini or Maserati or Corvette or something, they're just driving to a gas. Trust me, to drive into another gas station. All right. So let's say this Lamborghini starts like 2,000, 2,200 a month, but after insurance and all this other stuff, you got $3,000. So let's say you want a crazy car, it's $3,000 a month. Let's say you want somewhere decent to live. You're not crazy about your house, but you want somewhere decent to live. That is another $3,000 a month. Now, let's say, I don't know, gas and all that stuff. It doesn't go up with your income unless you're getting one of these super big houses, which you don't want because sometimes the bills are crazy. But let's say a house and your car is usually your biggest bills, but then you want some spending money, right? You need about $1,000 a week. Straight spending money. $1,000. So you're up to $10,000. Super nice house, Lamborghini, spending money, $10,000. Then you need $3,000 for incidentals, whatever the heck that means. You're up to $13,000 a month, right? That's what you need to live. Okay, so you have to figure out however you want to do this. However, I'm a real estate guy. Always gonna pump my fist for real estate. But not everybody's into real estate. Not everybody wants to be a landlord. You can have a business. You can have investments. 13 times 12 is 156, I think. $156,000. You basically need $156,000 after taxes. So you need about 200 grand a year. Maybe a little bit more. You understand? So you got to figure out what's going to make you 200 grand a year or $13,000 a month. You could get multifamily homes if you're in a place like New Jersey or something. That's about, just being conservative, even though it's way less. You could do it with about 4 and get 13 grand a month in Jersey. But let's be conservative and say you need 6 multifamily homes. Rent goes up with the cost of inflation. So you got the cost of inflation covered, meaning that if you're in Jersey, you got 6 multifamily homes, you could basically retire. You could still work. Everybody still works. We're young. We're going to keep working. It's extra money. Just don't have a super hard job. If you got a business, right? If you got a business, that business, if you're making 200 grand a year, you think it's going to be around in the future, you could do that. Also, everybody talks, I want stocks. You know what? In school, you go to school for your MBA. You know what you're going to learn about stocks? You're going to learn about stocks it's the worst investment in the world. Think about what a stock or a bond is. You're talking about a share of a company, right? They issue this stuff so they can raise money to make real money, okay? That's what they're doing. They're making real money off of this stuff. You understand? So stocks and bonds, the return is little. Think about it. 6 houses, you're basically getting it on margin or leveraging your home, meaning that if you have 6 houses, well, 2 of them will probably have to be paid off because you could have kind of really only mortgage 4, unless you know some little secrets or whatever, a mortgage broker, you're doing stuff that's not exactly above board. So let's say you have 4 mortgages and you have 2 paid for. Your total out of pocket at that point would be, let's just go high. Let's just say $800,000, right? If you put $800,000 into the market, now that's for your house. That's for you to make $13,000 a month or almost $200 a year. Your total out of pocket with real estate. And when I say $800,000, don't forget these houses are paying most of that $800,000. You're not saving it after like the 3rd house. It just is a waiting thing. They're just generating money. You're waiting for your next 20%. You get another house. 20% get another house. Maybe 25% at that time get another house. So don't worry. You're not saving $800,000. It's kind of paying for itself. Also, these houses appreciate. You might get a house or 2 that appreciates more than you thought, and you could take out equity and stuff. A whole bunch of tricks. Real estate is real cool that way. Now, for $800,000, if you took it and you put it in the stock market, you probably would make $64,000, right? 8 times 8, $64,000. What is that? $1,200 a week, maybe? 48, about $5,000 a month. Five times 12 is 60. You know what I'm saying? Five and some change a month. You're $8,000 off. You're not even halfway there if you put it in the stock market. That's why the return on investment on stocks are horrible. And people take that money and they make real money with it. That's why I'm not totally against stocks, but don't bet the farm on stocks, okay? Now, if you have a small business or something, you can also use that and say, hey, I'm ready to retire. So this is how you're ready to retire. Don't be one of those guys and you're 70 years old and you're like, well, I'm waiting for Social Security to kick in and this, that. Don't be one of those guys. Start planning your retirement now, because the sooner you plan your retirement, the sooner you get to retire. So how do you retire early? In my opinion, real estate. However, what other avenues could you use? You could use, we didn't even talk about stocks. We talked about stocks. We compared it to real estate, meaning that you're halfway there. But let's say for stocks, remember in real estate, you needed about $800,000. And that was like on a high end. And most of that money you're not putting in because the real estate's generating its own money for the 20% down, right? Let's say it wasn't. You put it in. You got $800,000. You put it in even though you didn't. We're just going to keep it simple. Stock-wise, in order for you to generate that much money, you're going to have about 8 times 3 is 24. Close to $3 million worth of stocks. And don't forget, stocks fluctuate. I have friends that are investment bankers. They fluctuate. Okay? 1 year it could be up. The next year it's down. Your bills, you can't call, wherever you got a credit card, you can't call American Express and say, you know what, I can't make the payment because my stocks are down. They'll be like, stinks to be you, brother. We don't care. Canceled. We'll write you a check for your points. That's what, and American Express, that's what they do. They cancel you and write you a check for your points. Stocks are not what everyone online makes it out to be. So be very careful with stocks, especially if you get the reason I'm telling you guys is because I don't want to see you guys make that mistake. Like you get $40,000 from an inheritance or some type of windfall, or you save $40,000. I don't want you to put them in stocks because it's very volatile. The market swings and stuff. I could teach you about real estate and you could almost guarantee that you're going to make money. Okay. So that's how much money you need to live. Think about your monthly and think about how you're going to get there. Okay? Monthly, get there. I suggest real estate, but you may have a business. I know a lot of guys own truck companies. Amazon made a way for people. It's a million ways for you to make money, but just think about your monthly, and that's how close you are to retirement. Right now, if your monthly passive income is $20, and you only need $1 million, you're way far away. You know what I'm saying? And get your passive income up. What is passive income? Passive income, my definition of passive income is something that you're not necessarily working for, meaning that you're getting return, you're getting money each month. However, you're not exactly working for it. People say you're making money in your sleep, but you could also say you're making money in your sleep with your job, but you're not. Because you're still putting in a certain amount of work, even on a multifamily, even if it's picking up a check. If you spend an hour a month picking up a check and you have a multifamily that's making $3,000, you're getting paid $3,000 an hour. But passive income basically is you're making a decent wage and you're not working that hard for it, okay? And you can do this for an eternity, all right? An eternity. If it's a job, that's why they say a job isn't necessarily passive income, because they could fire you anytime. But if you have your own business, not to say that your own business is the best thing, but we're going to talk about that in another video. But that's it. Not going to keep beating you guys in the head over this. Get you some passive income. Write your numbers down. See how far you are away from your goal, because it'll help you work towards your goal. All right? Like, subscribe, leave me a comment, send me $1 million. I don't know. But I'm Mr. Finance, Mr. MBA. I'm out of here, guys. Love you. Thanks for watching.